Good morning, everyone, and thank you for joining us for today's webinar, Getting Back to Business, Tips for 2020 and Beyond, New CARES Act Funding to Help Small Businesses and Nonprofits, presented by Rea Associates, a top 100 regional CPA. My name is Imani Fields, and I'll be walking you through a few housekeeping items for today's webinar. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. If you would like a copy of today's slides, you'll find that they're available in the handout section of the webinar dashboard on your computer screen. Today's webinar will be presented by Luke Lucas. Luke Lucas is a senior manager at Rea Associates responsible for assisting the firm's clients with complex multi-state taxation obligations. Luke also works to educate the firm on new state and local tax developments, also known as SALT, while expanding the firm's SALT service offerings. His area of expertise includes Ohio Commercial Activities Tax, flow-through entity state taxation, C-Corp state taxation, and state nexus. And now I will pass it over to you, Luke.
Thank you, Imani, and thank you for everybody for taking the time to attend this webinar on this nice Friday, at least up here in Northeast Ohio. This presentation is going to be primarily focused in the state and local realm, as Imani mentioned, whether it's going to be over Ohio's CARES Act funding package, which went live on November 2nd, or common areas of opportunity that may allow you to access immediate cash flow, as well as give you the opportunity to save you substantially on a go-forward basis. Not everything in here is going to apply to everybody, but the hope is that everybody can find something to take away from this that they will find value in. In the agenda, first thing we're going to go over is the funding overview in the Ohio's CARES package, and then go a little bit more into detail from that CARES package into the Small Business Relief Grant and the Bar and Restaurant Assistance Fund. And then after we get through that, we're going to go through some other avenues of exploration, just some kind of common areas of opportunity that we see whenever we get new clients within our client base. So here we have the polling question one. Just to start, I am familiar with Ohio's CARES Act funding program. You agree? You've heard of it, or you're really not sure? All right, so funding overview. Where's this money coming from? What this really is a trickle down from the federal CARES Act funding that was enacted back in March of 2020. Ohio's used the funding, to their needs to this point. We're going to see later on that if they don't use this money, they actually have to return this to the federal government by the end of the year. So what they're doing is, since they have money left over, they're looking for ways that they can benefit small business taxpayers in the state of Ohio, as well as residents and nonprofits and the like. So the state originally received $4.5 billion in funding. As I said, it must be returned to the government if not spent by December 31st of 2020. So what they did is developed in partnership by Governor DeWine, Lieutenant Governor John Husted, and the General Assembly. They put together this package. This package was ultimately approved by the State Controlling Board on October 26th, so almost 2 weeks ago at this point. And then the application period opened starting this past Monday on November 2nd of 2020. Ultimately, what that package included was a total of $419.5 million in funding to help Ohioans. This includes funding allocated for small businesses, restaurants and bars, hospitals, higher education, arts, nonprofits, and low-income Ohioans that were affected by the pandemic. Each category, as you'll see on the next slide, has different qualifications and dollar figures allocated towards that. So this graphic is pulled from the governor's website. Out of this $419.5 million, it's broken out in the following. $50 million of that goes to rent, mortgage, water, and/or sewer assistance to individual Ohioans that could use the assistance. $100 million to higher education, $25 million to nonprofits, $20 million to arts, $62 million to rural and critical access hospitals, and then we're going into more detail about $125 million to small businesses and $37.5 million to bars and restaurants. So first, we're going to go over the Small Business Relief Grant. We did list a link in this slide for you to directly access this. So there's kind of a funding hierarchy here. And what the state did is they first allocated $44 million to the first 50 applicants in each of Ohio's 88 counties. So what this does is, depending on how fast or the number of applicants that they may have. So in your higher populated areas, you may have much more. You're going to have much more applicants than you would in, say, a rural county in Ohio where there's much less population. So they did this first hierarchy just to ensure that everybody across the state gets some access to this funding. Now, so with the 50 applicant limit, there's only $44 million that's allocated to that. And as we saw on the previous slide, there's a total of $125 million. So after these first 50 applicants in each county are filled, there's a remaining $81 million available for everyone else, and that's on a first come, first served basis. And really what this is going to be is any eligible businesses, if they're approved, they'll receive a $10,000 grant for use on personal protective equipment, mortgage and rent payments, utilities, employee salaries and wages, and business supplies and equipment. Now, I do want to note that when applying, the state does recommend using Chrome, Edge, or Safari web browsers. There have been users that have experienced issues with Internet Explorer or Firefox. You must have an Ohio ID to apply. I may not know what that is offhand, but essentially, if you have access to the Ohio Business Gateway, and if you're a business in Ohio, you should have access to the Ohio Business Gateway already. You already have an ID. And when prompted, so you'll just type in those login credentials. You also do not have the ability to edit these applications after submission. So you do want to make sure that, due to the number of applicants and the time sensitivity of all of this, you do want to make sure that you're submitting it correct the first time to prevent any issues and increase the odds to the best you can to receive this funding. And if for whatever reason a county's allocation is not used up after 21 days after the application process is open, so that would be November 23rd in this situation, the remaining funds would then be released and then going to that $81 million pool that would be made available for everybody in Ohio, regardless of the location. And in regarding to the cost, or the eligible using of the grant money, we do list a lot of the common expenses that would apply down at the bottom, but there are some ineligible costs. So that, and a couple of examples of those would be using this grant money to pay outstanding tax obligations, or using it for non-business use, or potentially political purposes even. So most businesses, they're not going to have an issue using that 10 grand without a doubt on eligible costs. So there should not be an issue there. Just make sure you're using that in the correct manner. So what's an eligible business for the Small Business Relief Grant? You need to be a for-profit entity that had between 1 and 25 W-2 full-time equivalent employees as of January 1st of 2020. So there's two ways to go about this. You can calculate by a head count. So I have 20 full-time W-2 employees. We'll just submit the W-2s. But you may be a business in a situation where maybe you have 35 W-2 employees, but maybe half of those are part-time employees. So what you could do in that situation, you're not automatically ineligible for this grant, what you would need to do is calculate the total hours of all W-2 employees for the 2019 calendar year and divide that by 2080, and that should give you your true full-time employee equivalent. Eligible businesses also must have a physical location in Ohio. 90% of annual revenue must be based on activities performed in Ohio. Business operations also must have been continuous since January 1st of 2020 and have the ability to continue operations, and of course, with the exception of any interruptions due to COVID-19 public health orders. So they don't want you to get this grant money and then, like I said on the previous slide, close down business potentially and use it for non-business use. And I also do want to point out, a common question that we have received, you are still eligible if you received any federal funding, such as the PPP loan, very popular, or maybe any local funding that may have been organized by your county, so long as you've, of course, used those funds or will use those funds on qualifying expenses. Ineligible businesses, nonprofit entities, clubs as defined in section 4301.01 of the Ohio Revised Code. Any businesses primarily engaged in sales of liquor, tobacco, cannabis, and vaping products. I do want to note this does not include restaurants or bars. You're primarily, in terms of liquor, you're talking about your liquor distribution or your straight liquor stores. There's in businesses that are primarily engaged in political or lobbying activities are not eligible. Publicly traded businesses not eligible. Hospitals, ambulatory surgical centers and long-term care centers, private schools, and others not listed above. Mostly those under regulation of the Casino Control Commission. So application information, for the most part, this application, in my opinion, is not too bad, especially compared to the PPP loan application. This is something that can probably be done in an hour. To start, you're going to need, assuming you have your Ohio ID, which you should have, you're going to need to provide your general information, such as your name, address, county, EIN, business type, and the years of operation. Now, if for some reason, maybe you're located, or you have a couple of operations and you're located on near a border of the state, so maybe you have an office in West Virginia, and maybe you consider that your primary office, even though most of your business's activity is in Ohio, you do need to use an Ohio address if that situation were to be relevant to you. You need to include on the application the amount of funding received from other pandemic-related programs. So as I kind of stated on the previous slide, this is going to include your federal funding that you may receive, the PPP funding, or anything from state and local governments that you may have received. You do need to include W-2 employee verification. So if using a head count, any official payroll information from your provider or documentation submitted to the state for 2019 is going to be sufficient. So this can be anything that was submitted to the Bureau of Workers' Compensation, Department of Job and Family Services, or the Ohio Department of Taxation, in addition to your payroll reports. If using the full-time equivalent calculation, you're going to need to attach your 2019 payroll records with that calculation. And as I said on an earlier slide, once again, that calculation is done by taking the total W-2 wage hours and dividing that by 2080. And 2080 is your 52 weeks times 40 hours a week. That's where that comes from. You need to verify or verification of your business cost incurred during the prior 60-day period. So really the state is just looking to make sure that, hey, you're still a business in operation. And like I said, not going to just get the grant money and close down business and use it for non-business expenses. So to do this, you're going to need to provide payroll records, utility bills, rent, mortgage payments, supplies or equipment invoices, really anything that just shows that you're still in business. You also do need to include your most recently filed federal or state of Ohio income tax return. And really what they're looking for here is they're just looking to confirm the business identity. So make sure the name, address, FEIN, matches up with your application. And they did also state that if for whatever reason you can't attach, your entire return, the first page of return is sufficient, because that's all they're looking for there. And then of course, certification that the applicant agrees to the terms and conditions of the grant. This is just a checkbox on the application, verifying that you'll use the money, as required by the state. Something I do want to mention is we did get some questions on sole proprietors who may be the only quote unquote employee in their business, but they don't have any W-2 employees. And we did confirm from the state that you do have to have at least one W-2 employee in order to be eligible for this grant. If you're a sole proprietor and it's just yourself, and you're technically not supposed to give yourself a W-2, then you're not going to be eligible. If approved, businesses will receive an email notification of approval. The applicant must sign back into the application and accept the funds within 7 days. If the funds are not accepted within a week, those funds will be rescinded and go back into the general pool. You're going to miss your chance, but it's important that you pay attention for that email and make sure you get those funds accepted in a timely manner. Once accepted, funds will be received via check to the business address that was identified in the application. And regarding a maintenance of records, they do require businesses who receive the funds to keep the records of expenses for 5 years. Some examples of these records are going to include invoices, canceled checks, and payroll records. Now, if a state were to inquire, they do say that failure to provide the records in a timely manner is going to or may result in a request for repayment. So make sure you keep those records, or down the road, if you're not able to provide proof of how that grant money was spent, they may ask for it back. And for what it's worth, the state did say that they would begin sending out emails on November 3rd, so the day after the application process opened. We have not heard of a widespread responses to our client base yet. However, we have had a few clients that have trickled in and let us know that they have heard back from the state and their application had been approved. Now, wrapping up the small business relief grant section, with all of this said, it has been reported that there has already been, within this week, more applicants that have submitted an application than the funds that are available. However, the state has said that they do encourage businesses to continue to apply. And really, the reasoning behind this is, I think they're expecting a lot of errors. Well, first off, you have that there may not necessarily be 50 grants or 50 applications in every county yet. So if you're in a populated county, that's probably not going to apply to you at all. But if you're in a more rural county, there may not be 50 applicants in that county yet. So definitely consider applying still. And then of course there's probably going to be plenty of applications of businesses that get denied for whatever reason. They may submit multiple applications, which is inflating the number of applications that the state have received. So those will get thrown out. And then of course, for whatever reason, there's probably going to be businesses that ultimately don't end up claiming their funds in a timely manner, which is why you really need to keep an eye on those emails and make sure you accept those funds within that week. On to the Bar and Restaurant Assistance Fund. So there was a total of $37.5 million in funds designated for this program. What this breaks down to is $2,500 grant per alcohol permit holder that provides on-premise consumption. Licensees, now this is an important note, so if maybe you have multiple locations across the state of Ohio, you're not limited to one grant of $2,500. You are eligible to receive the $2,500 per unique business location that you have that has the proper alcohol permit that's valid. And another important note, unlike the small business relief grant, the state did make this grant available for every single permit holder in the state of Ohio. So if maybe you didn't get your application submitted this first week, no need to worry that there's enough funds available for everybody. Permit holders, they need to have an active on-premise permit as of October 23rd of 2020. Now, there's obviously the restaurant and bar industry has been hit pretty hard due to COVID-19, and many of those businesses are maybe shut down, definitely working on limited hours. And they do note that businesses do not have to be open, but your liquor license must still be active. The funds are able to be used on COVID-related expenses. I don't know if you've been in any sort of restaurant or bar lately, but you walk in, there's the plexiglass panels everywhere, and certainly all kinds of measures, and your payroll expenses and all that is going to apply as well and be COVID-related expenses. So shouldn't have any issue whatsoever in spending those funds in a proper manner. And then additionally, we do want to note that entities that also qualify for the Small Business Relief Grant, you can also get the Bar and Restaurant Assistance Fund if it's applicable to you. So you can compound your benefits in getting both of those grants, assuming they're both approved. And then a couple of additional notes for the Bar and Restaurant Assistance Fund. You can have any amount of employees and still be eligible for the funding. This isn't like the Small Business Relief Grant between 1 and 25 W-2 employees. You can not have any employees and still get the funding. And then additionally, the businesses must be an on-premise, or the restaurants must be a on-premise liquor permit holder. So unfortunately, if that's going to rule out most fast food restaurants if you do own some of those. So on this slide, really not much on here. I did just want to list out the 30 types of permits that the fund does apply to. I don't know what any of these mean, but if you're a bar or restaurant owner, you certainly are going to know what your liquor permit is and therefore whether or not it applies to you. And for anybody who may not know if your liquor permit's active or what permit you may have, we can provide a link to you to look that up in the state database. Just let us know. So once again, like the Small Business Relief Grant, we did provide a link here that you can directly go to log in and apply for the Bar and Restaurant Assistance Fund. Very similar to the login information for the Small Business Relief Grant. Having the Ohio Business Gateway login is going to be sufficient to log in and apply for this. This application is not quite as intensive as the Small Business Relief Grant, even though the Small Business Relief Grant really isn't much to begin with. But licensees in the application, you need to include your FEIN or Social Security number, your liquor permit number, and the address for each unique location at the time of the application. The applications are going to be accepted through December 30th of 2020. However, as I stated in an earlier slide and we have listed on this slide, if these funds that Ohio has received from the federal government are not spent prior to December 31st of 2020, they must be returned. So even though the state is accepting these through December 30th, and there's plenty of funds available for everybody for this fund, I do recommend applying as soon as possible and not waiting, just to ensure that you get your funds. The Department of Administrative Services are going to send the checks as soon as the applications are processed, and you'll get an email confirming successful submission, and a check will be sent to the address or addresses in the application. Unlike the Small Business Relief Grant, there's no need to log back in and confirm and accept the funds. Polling question number 2. I believe, based on what we went over, my business will qualify for Ohio's Small Business Relief Grant and or Restaurant Assistance Fund. All right, nonprofit support. Now, we do believe that there's some nonprofit members that have attended this webinar. As I stated in the overview slide, there is $25 million that is being allocated to nonprofits. We've tried to find out what we can for you. We reached out to the Ohio Small Business Development Contact, and they did let us know that these funds are being administered and distributed by the Ohio Department of Jobs and Family Services. Unfortunately, that's really all that we're able to provide at this time. There's nothing on their website as of yet. I've attempted to contact the department a couple times and have not gotten a response on how a nonprofit would go to obtain that funding. So if we hear anything, we'll certainly let people know. But if you want to take matters into your own hands, I would recommend reaching out to the Department of Family or Jobs and Family Services directly. Other avenues of exploration. So a couple governmental funding programs out there. It's the Appalachian Region Loan Program, and then there's some county programs. So the Appalachian Region Loan Program, this benefits small businesses in the 32-county Appalachian region of Ohio. I list the website out on here. I can provide a map of what they deem the Appalachian region if anybody's interested in that. Don't have it in the slides, but I believe they also have it on their website. So what this funding is this is $10 million in $10 million that is loaned to the Appalachian Growth Capital LLC. So what they are doing, the state has given the money to this entity, and Appalachian Growth LLC is administering the low interest loan program. The maximum loan amount is $500,000, and businesses have up to 6 months to defer the repayment process. In regarding the application, you have to complete an application, a general application, employment level reports, and a 13-week cash flow statement to be considered for consideration. Now, this program has been out for a couple months now, but from everything that the information that we have available to us, there is still funding available. It does seem to be a more, complex application process than the other two programs that we previously went over today, but that may be worth exploring if you're looking for a low interest loan and located in the Appalachian region. And there are county programs, county small business grant programs with various eligibility requirements. So this would have been, for the most part, earlier on in the year when these were mostly made available. And each county kind of did their own thing and different requirements and thresholds and whatnot. But yeah, so for the most part, I expect these application periods to be closed or the funds that have been made available to them dried up. But it's still something that may be worth looking into. And really the best place that you're going to be able to go to find out if there is anything available would be to your local county economic development department or corporation, however they do that, or perhaps your local chamber of commerce to find out more information. So the commercial activity tax, moving from, the funding that's available to you to maybe some tax tips, common areas of opportunity or improvement that we see whenever we get new clients in our firm. First tip is going to be you may want to review your sales sourcing and record keeping. It's not uncommon at all for us to see taxpayers who don't report their taxable receipts for commercial activity tax purposes in the most efficient manner. This can be pretty straightforward in many situations if you're a seller of tangible personal property. If you're a service provider, they can be quite a bit more complex. But just because if you're a service provider located in Ohio, don't assume just because everything's done right here in Ohio that all your receipts are sourced to Ohio. There's likely opportunity for you to source some of your sales out of state. Record keeping is also important, especially for service providers. you need to make sure you input all the client data that you have available to you at the time of transaction, just because different states do have different sourcing requirements, and having that information available to you is going to allow you to or report your CAT receipts in the most efficient manner. And additionally, for sales of tangible personal property, for CAT purposes, Ohio does have a unique rule where you are allowed to source your sales of tangible personal property to their ultimate destination. So let's say you're located in Columbus, you have a large customer who usually comes and picks up your product in Columbus and takes it to Indiana. If you have proper documentation on file at the time of sale that that product is going to end up in Indiana, even though they may have picked it up at your warehouse in Ohio, that's a tax planning opportunity that can save you quite a bit in commercial activity tax purposes. I do want to talk about the R&D credit some. I'm certainly not an expert in this, but I've been looking more into it recently, as I believe it's an area of opportunity for many taxpayers across the state of Ohio. And from my understanding, the opportunities for this R&D credit really kind of expanded with the PATH Act that was passed a couple years ago. But for the most part, when I think of R&D credit, I think of manufacturing, and I assume that's kind of what everybody else thinks as well. If you're a manufacturer with a NAICS code starting with 3.1, 3.2, or 3.3, it's worth talking to an R&D provider. And I will say that Rea Associates, we do not calculate R&D credits, but we do have firms that we work with. And if you're looking for somebody to get in touch with, we can certainly assist you with that. I think most firms will be happy to have a 20 or 30-minute phone call just to get to understand your business, and they should be able to identify fairly quickly whether or not you have an R&D opportunity. Going into some other industries here, ones that I don't typically think about when I think of R&D credit. You're a software and app developer. So NAICS code starting with 5415, you may have an opportunity. If you're in biotech or life sciences, 5417 starting NAICS code. Engineering, 5413, and then really any other organizations that employ chemists, engineers, scientists, developers, or coders. You may have, your primary business model may not be in those industries listed above. There may be an opportunity for an R&D credit there. And in addition, I do want to note once again, because I'm a state and local tax person, if you are awarded the R&D credit for federal purposes, and you're located here in Ohio, you need to make sure that you get an Ohio R&D credit calculation as well, because that can save you substantially in tax applying that R&D credit for commercial activity tax purposes. Ohio, I will say that they're not, if you amend returns to claim the R&D credit, they're certainly going to inquire about the calculation. So your CPA provider can act as a liaison, but ultimately you're going to need to get likely get your R&D credit provider involved in working with the state and helping getting that credit approved. And the last thing on the R&D credit I want to touch on, if you haven't done it in the past, but think you may have been able to do it in the past, you can do those credits on a retroactive basis and fully take advantage of the statute of limitations that is available for refunds for both federal and state tax purposes. So once again, we're talking ways, this can save you in the future, but we're focusing this presentation here on ways to obtain immediate cash flow. So obviously the future is the future, but you can take advantage of the past as well if you think that that's an opportunity that may have been missed for your business. So municipal income tax and the business income deduction. Is once again not uncommon for us to bring in new clients who may still be reporting 100% of receipts to their quote unquote home municipality, even though the rule had changed. So the rule changed. This is commonly referred to as the throwback rule. This was eliminated beginning with the 2018 tax year. So in the past, if you did not have nexus in state or in cities outside of or states outside of your local municipality where you're located in, say, one municipality, you would have been required to report 100% of your receipts. to your home municipality, your municipality where the sale originated. Beginning with the 2018 tax year, they changed that. So now, regardless whether you have Nexus or not, you only need to source the receipts to your home municipality if you have property that's shipped to your home municipality. So in many situations with our manufacturing clients, what that resulted in is, because for municipal tax purposes, you use a three-factor formula. You used to report 100% of sales to the city. Now you report 0% of sales to the city. In most cases, they're very minimal sales. And what that does is it results in a 33% municipal income tax savings for your business. And then we have House Bill 5 and House Bill 5 and House Bill 49. I don't remember the exact year that they were signed into law, but these are both within the past couple of years. And with House Bill 5, all municipalities are allowed to require net operating loss carryforwards beginning with the 2017 tax year. Now, of course, there is a phase-in period for that, but prior to this bill going into effect, there were approximately 260 out of the 600 taxing municipalities within the state of Ohio that did not allow net operating loss deduction. And for reference, most common geological area prior to the bill being passed that did not allow net operating losses were Columbus and the surrounding suburbs. So if you had net operating losses in 2017, 2018, maybe not in 2019, you need to make sure that those net operating losses are being tracked and deducted as applicable. There's an opportunity to get a refund there. And then one last thing on the Ohio municipal income tax that is not included. You may want to double check that your business is actually operating within corporation limits. So just because, say, you may have a Cambridge, Ohio address as your business address, that doesn't necessarily mean you're operating within the corporation limits and subject to taxation in that city. And an easy way to kind of figure this out and determine that for yourself is just Google Ohio Tax Finder, and it'll take you to the appropriate link. You can type in your address, your business address, and it'll pop up, show you what municipal tax you're subject to, if any. And of course, if you weren't, then you have the ability to amend the prior year returns, take full advantage of the statute of limitations, which I believe is 3 years for city tax purposes, and get any tax that you may have paid refunded to you. Higher business income deduction. We also see some opportunity here. First, make sure that all eligible income is included in the business income deduction schedule. So if you're an owner of a flow-through entity, of course, all income included on those K-1s you receive from the flow-through entity. You can also, something that we do see missed is if you have at least a 20% ownership at any time during the year, so beginning, middle, or end, if you own at least 20%, you're allowed to include your any wages that you received or guaranteed payments. That's an area that we see where there's sometimes opportunity. And as I said, make sure you're including all K1 and certainly most situations, vast majority, include all K1 income in addition to your ordinary income. So interest, capital gains, in most cases that should be included, and of course that's going to lower your tax liability. Resident credits. If you're in a business who maybe files a flow-through entity that files in many states, you exceed the $250,000 of business income deduction, you're paying taxes in other states. You need to make sure that you're taking your resident credit for taxes paid to other states. That's going to lower your higher tax liability. Once again, anything here I'm pointing out, you have the ability to, if it hasn't been done in the past, you can amend returns to appropriately report the correct tax due and get what's rightfully yours. Now, I will say, state of Ohio, they generally do not just give money back. They're certainly going to inquire about it some, but assuming everything's good to go, you'll eventually get that money. And then lastly, in terms of the business income deduction, you also do want to be careful on what you are claiming for capital gains in the business income deduction. As a state, we're really seeing the state crack down in this area. So if you have capital gains from your business and from selling assets, the state's going to maintain that is business income at the business level. So therefore, it's going to flow and keep the same characterization at the individual level and eligible for business income deduction. But maybe there's situations where, maybe individually you sell stock, you have a capital gain. That's not business income deduction, or that's not business income, therefore should be included in the deduction. Maybe you sold your business and it was a stock sale, but it's treated as a 338H10 election for federal tax purposes. So for federal tax purposes, that would be treated as an asset sale. But what the state looks at, they want to look at the true form of the business sale and being that it's a stock sale. They would maintain that it's not business income, therefore not includable. And we're talking sale of businesses that can be pretty substantial amounts of tax that we're usually looking at. So you want to make sure you have that correct. So down the road, you don't get any huge tax notices from the state assessing you for past tax due. And of course, you don't want to pay, that can save you quite a bit in taxes as well. So you want to make sure you're reporting the capital gains that are eligible to be reported. So exposure, control, and remediation. So this is kind of switching gears a little bit from everything we've talked about prior to now. So prior to now, we've talked about how we can put money in your pocket immediately. Now what we're going to do is talk about some items to be aware of so that maybe you don't have money expectedly taken from you for state purposes. So before we get into this, it's important to know that states are required to maintain balanced budgets and have taken a significant revenue hit as a result of COVID-19. Constitutionally, they need to find a way to balance their budget. So, from a practical standpoint, I would probably suspect that they're probably going to be a little bit more aggressive for tax purposes and collections than they may have done in the past. As a result of that, you really want to be careful of teleworking employees and the income, payroll, and/or sales tax filings that you may be creating for yourself as a result. I believe states bordering Ohio, I know Pennsylvania offhand, I believe, is providing temporary waivers, nexus waivers. If anybody wants a full list, just let us know, and I can send that to you of where states are standing. But short answer, or in summary, many states are not providing temporary waivers. So if you're located in Ohio, maybe have an employee that's a native of Kentucky and decided to go back to Kentucky to spend time with his family during this time, you may be creating tax filing consequences for your business and ultimately yourself as well. And even the states that are providing temporary waivers, and we'll talk a little bit more about this below with Ohio, you need to be aware of the expiration date on those waivers. And going more into that, Ohio, they are providing protection for both municipal and state tax purposes, and what they've said is those protections are going to end 30 days after the pandemic emergency declaration is lifted. However, this may end sooner as there are a couple of bills that have been introduced in legislation. Senate Bill 352 and House Bill 754. They're targeting this Ohio's municipal income tax protection. So what this does is this is a good benefit for your larger cities and your employers. Basically what it says is employees are to be treated as quote unquote working at their principal place of work until the pandemic declaration is lifted. So what that does is it keeps tax revenue in your larger cities, and it makes the compliance process much simpler for your employer. They don't have to worry about withholding in a ton more municipalities than they may have in the past. They don't have to worry about income tax consequences of you working somewhere else besides where they're located. However, the reason why this is being challenged is because this is ultimately it's kind of a pick your poison situation. An example of this would be myself. I spend the majority of my time, from March until now, working at my home in a township. However, my home office is in Independence, Ohio, which has a 2% tax rate. So even though I'm working in a non-taxing jurisdiction in my township the majority of the time, I'm still having 2% of my paycheck withheld. And that's the reason why there's challenges to this. So these bills are looking out for employees, but there would be significant consequences for employers and cities if this rule were to be changed. But like I said, just be aware of when the emergency declaration is lifted, because you do have 30-day grace period. And technically, if you have employees working at home or remotely teleworking, after those 30 days for your business, you are going to create income tax and payroll issues for your business. Then, lastly, now may be a good time to look into sales economic nexus as a result of the South Dakota versus Wayfair case. So this was ruled on by the United States Supreme Court in 2018. And basically what this done is, excuse me, remove the requirement to have a physical presence in a state in order for the state to impose their sales tax collection and remittance requirements on your business. Yeah, that was a big change and really a windfall for states, in my opinion, and something that helped states pretty substantially throughout this COVID-19 crisis thus far. As from everything we've seen in our client base and in industry readings, e-commerce businesses have really boomed during this time. Many of our clients, have looked into this and worked on becoming compliant, but we also do know there are many taxpayers who may be vaguely familiar with these rules, may have decided to take chances in doing this and avoiding this thus far. But now it's the perfect time for states to be more aggressive, specifically for out-of-state taxpayers, and look for businesses who may have been required to file for sales tax purposes. And I do want to say, Ohio's heavy manufacturing state. Not uncommon for us to say, hey, all my sales are exempt. Or maybe your sales are exempt, but you need to at least make sure you're getting the proper documentation with exemption certificates on file in case a state does decide to look into you and you want to try and avoid the registering and filing of your returns aspect. You at least want to have your exemption certificates on file. And lastly, these economic nexus thresholds, they're going to apply to a lot of, really many sellers of tangible personal property. I would say, $2 or $3 million annual revenue range, you're going to have issues out of state. And of course, you can't have issues in a lower revenue range than that. But for the most part, these states have adopted thresholds in the $100,000 range. So if you sell $100,000 to the state of Indiana, assuming that's their threshold, you're going to have a filing requirement. And they even get you one other way too. Is it's not most of the time it's not only based on the amount of sales in a state, but they can also look at the amount of transactions in a state. So many states have a transaction threshold on the books as well as another, gotcha, and those are typically 100 transactions. That's another point you need to look at when determining whether or not you have nexus. Polling question number 3, based on that last slide, I potentially have out-of-state filing obligations that need addressed. Agree, disagree, or unsure. So that'll conclude everything that I wanted to go over. So now I would like to go ahead and open up for questions if anybody has anything.
All right, so we did get a couple questions here. So the first question we have is, how is the 90% of annual revenue based in Ohio calculated?
Right. So my understanding is that they would look at, where's your property located, where's your payroll located. If you're a manufacturer, your property is going to be quote unquote generating much of that revenue. If you're a service provider, they may look more at payroll. So if you're still obtaining personal property, I'd probably look at your property and determining what percentage of your property is in Ohio. And then if you're a service provider, I would look at the payroll route.
Awesome. The next question we have here is the bar and restaurant assistance available to breweries, wineries, and distilleries?
Yeah, so my understanding is that it is. Once again, I listed on that one slide, we listed out all of the alcohol permits that are apparently eligible for the fund. So I would look at your permit and compare that with that list, and if it's on there, you should be able to obtain it.
The next question we have here is regarding the small business grant. Would a newly established company who bought another's assets that keeps using the previous business name be anyway limited to apply for this grant?
That is a great question. I would assume I think it would depend on when the assets were purchased and when the new business was incorporated. So if it was incorporated in 2019, you were registered and filed W-2s for that year, which is what the state is mostly looking at in those W-2s, and they're under your new business name and EIN, then you're probably going to be fine, assuming you meet the other qualifications. But if that didn't happen until 2020, you're probably going to be out of luck.
Great. The next question we have here is, for the payroll proof needed, would submitting a 2019 W-3 work, since it shows the total of W-2s as long as it's under 25?
I believe the W-3 would work, but you should be reporting something to the state as well. So I recommend using the state forms just to ensure or expedite the process and prevent any questions that may come up. But I would think the state would probably accept the W-3, but they did not list that in their commonly accepted form section.
Great, and we have 3 more questions here, so if you guys have any more questions, make sure you're putting them in the chat box. So the next question is, can you clarify how many applications for the Small Business Grant Program to date are available, covering the 88 million available?
Yeah, that's a good question. I don't know how many are available. I know, based on what's been reported, that there have been more applications submitted already than looking at $10,000 per small business grant. That the number of applications would exceed the amount of total money available, but that's all the detail that's been made available to us. We don't know if they've exceeded the amount of 50 applicants per county that they specially allocated. And once again, the state does recommend that you still apply because I think they expect many issues to certainly not be uncommon, and that could open up an opportunity for you to ultimately receive the funding. But I would definitely apply as soon as possible if you have not done so already, to increase your chances.
Okay, the next question we have here is, we also have a small farm. We may get some money for COVID relief for cattle or crop corona relief. Would this disqualify us?
Sorry, Abby, can you repeat that?
Sure. It says we also have a small farm. I'm assuming that's going on the W-3 question. We may get some money for COVID relief for cattle and or crop corona relief. Would that disqualify us?
No. So assuming you'd be eligible under all other eligibility requirements, any other relief that relief that you may have received from the federal government or state and local government does not disqualify you, but you do need to disclose that when submitting your application.
Awesome. We're getting some more questions in here. So the next question is, if my company received a PPP loan from the federal government, are we eligible to apply for this loan? Is it a grant or a loan that has to be repaid?
So this is a grant, and your business would be eligible to apply for it.
And the last question we have here is, how soon will the grant money be available? We applied on day one on Monday.
Yeah, so as I said earlier, many of our clients did apply on that first day on November 2nd. Very few have received confirmation from the state that they've been approved. If you get confirmation, you need to make sure that you go back, log back into the application and accept the terms and conditions of the grant. And then from there, I don't necessarily think we're at the point of anybody's actually received the funding yet, being that we're only a week in, but I would expect the state to get it out to you pretty soon.
Cool, and I have one last question before we wrap up here. It says we manufacture items for 6 brands. 5 of the brands are out of state. Do I report only the sales for the brand that is located in Ohio for CAT tax?
So you manufacture, regardless of the brands, and I may need to have a better understanding, but regardless of where the manufacturers are located, it's going to depend on where you're shipping it. So if you're shipping out of state, you're likely not going to need to report that for commercial activity tax purposes.
Cool. And if you have any last thoughts, you can go ahead and give those now, and then I'll wrap it up.
Yeah, I guess final thoughts. We really went over a multitude of topics today, most of them at a higher level due to time constraints. But if anyone would like to discuss anything that I went over in more depth, please let me know. My contact information is listed out here. I would be happy to help you in any way that I can to help your business. And if anything you have, if I'm not able to help you, I can certainly get you in touch with somebody that will be able to. And thank you, everybody, for your time.
Thank you, Luke, and thank you for joining us for today's webinar on Getting Back to Business, Tips for 2020 and Beyond, New CARE Act funding to help small businesses and nonprofits. We hope that Luke was able to provide you with some valuable insight in regards to best practices and potential solutions. If you sign off today and you have additional questions, you're always welcome to reach out to Luke directly. I know we have a few questions that came in at the end, so we'll be sure to get an answer to you. So thank you again, and we hope you guys have a great day.